Okay, good morning, everyone. Looking at the US stock markets, the Dow has earlier retreated from the 27,000 all-time high level. Since then, the Dow has pulled back towards the 24,000 psychological level, forming the double bottom formation around that. Subsequently, the Dow has traded higher for the next three consecutive trading days. However, on last Friday, we did see that profit-taking activities came in on the Dow Jones as the Dow has retested the EMA 20 level, which is around the 25,500 points. It rejected that and subsequently it pulled back. The weakness was mainly underpinned by the weaker than expected earnings guidance from Apple. Apple has tumbled about 6.6%, falling to the uh, correction phase on the stock on the counter. So moving forward, on the Dow wise, we could expect some of the mild pullback on the Dow towards the 25,000 to see how it holds there. If the 25,000 level cannot hold, then we might see a further pullback towards the 24,000. But if you can see some of the recovery back above the 25,500 points, then that could be a chance that the Dow could be heading higher back towards the 25,750 or even towards the 26,000 psychological level. Similarly, on the S&P 500, we did see the S&P 500 has traded lower from the 2940. Since then, we are seeing a renewed volatility towards the 2600. After touching around this 2600, we are seeing a technical rebound on the S&P 500. It formed a 3-day recovery, but it rejected the EMA 60 level, which is around the 2750. And on last Friday, we are seeing the bearish candle was being formed. So for now, we could expect some of the weakness on the S&P 500 to linger towards the 2700. If the 2700 level cannot hold, then we might see further pullback towards the 2650 level. In the meantime, any gains for now will be just capped towards the 2750 until we can see a breakout above the 2750. Then only we can confirm for further recovery on the Dow back towards the 2800 psychological level. Okay, some of this on the core prices. The core prices continues to see the reversal trend continues to occur on the core prices. It has retreated from the 77 US dollars per barrel level. Since then, we are seeing a violation below the 70. This has confirmed the core prices forming the lower high and also the lower low formation. So for now, we could expect further weakness on the core prices towards uh, the next support level, which is located towards the 61 or even towards the 62 60 US dollars per barrel level. For now, given that the crude prices has already traded lower for the past 5 trading days, any recovery from now will see gains to be capped towards the 65 before the next pullback rate to resume. Okay, some updates on our local front. The FMKLCI has earlier been traded towards the 1700. Since then, we are seeing a technical rebound with gains just limited towards the 1740 before the next pullback rate to resume on the FMKLCI towards the 1670. After touching the 1670 forming a hammer candle, we are seeing some of the renewed recovery on the FMKLCI as a key index recovered back above the 1700 and also close above the EMA 9 level. However, on last Friday, following the tabling of budget 2019, we are seeing some of the dodgy candle or uncertainty candle was being formed on the FMKLCI as the key index retested the EMA 20 level. So for now, on the FMKLCI wise, we could expect some of the mild gap up formation on the FMKLCI in the at the opening bell, but we could see some of the intraday profit taking activities to occur on the FMKLCI at least for today towards the 1700 psychological level. Similarly, on the FM small cap index, we are seeing the FM small cap index has staged a very strong recovery after the next wave of pullback from the 14,500 points level. We are seeing a good recovery from the 30th of October. The FM small cap index continues to march higher. It has climbed above the EMA 9 level, and on last Friday, we are seeing the FM small cap index has retested the EMA 20 level. So for now, on the FM small cap index wise, we could expect some of the further rotational play on the FM small cap index on some of the selected sector winners on the budget 2019. So for that, we could expect some of the rotational play on the lower liners back towards the 13,600 points level. On stocks wise, the insurance sector is one of the winners on the budget 2019. So we can see that on Tune Protect, we are seeing Tune Protect has staged a sharp down pullback from the 1 ringgit psychological level. Since then, Tune Protect have found some support along the 60 cents. After touching the 60 cents intraday low, we are seeing Tune Pro has staged a sharp recovery pattern as Tune Pro has recovered above the EMA9 and EMA20 level, with some of the improvement in volumes being traded. With that, we could see further upside on the Tune Pro towards the next resistance, which is located towards the EMA 60 or the 74.5 cents, or even towards the 80 cents. So the first target price is at 74.5 cents towards the 80 cents. Your stop loss point can be trailed towards the EMA 9, which is currently located at the 66.5 cents level on Tune Protect. With the recovery above the EMA 20 level on Tune Protect, we are also seeing the MACD indicator has already issued a buy signal, whereas the RSI has recovered above the 50 level as well. On MPHB Capital, which is another insurance-related company, MPHB Capital is still in a downtrend phase. For now, any recovery will be just taken as a technical rebound play. MPHB Capital has staged the pullback towards the 1 ringgit and 13 cents level, and since then we are seeing some of the support along then as MPHB Capital has recovered and retested the EMA 9 level. So for now on MPHB Capital, what we need to do now is we're going to monitor for the breakout above the 1 ringgit and 20 cents level, the short-term consolidation breakout. Should that be a breach above the 1 ringgit and 20 cents, we could anticipate for the breakout, the pullback for us to accumulate towards the 120 and the potential continuation pattern to be established for MPHB Capital to trend towards the 129 or even towards the 1 ringgit and 37 cents, 36 cents or 37 cents level. So the first target price is at 129 towards the 137. The stop loss located at the 1 ringgit and 13 cents on MPHB Capital. Should price breach above the 1 ringgit and 20 cents level in the near term, we could expect the MACD indicator to issue a buy signal, whereas the RSI could be rising back above the 50 level as well. Some other stocks that we can watch out for will be MRCB. MRCB has earlier recovered from the recent low of the 55 cents level. Since then, price has recovered towards the 88 cents. After touching the 88 cents level, which is the previous gap down formation as well, we are seeing price has staged just a sideways pattern. But recently, if you zoom into the short-term wise, we are seeing this with the potential short-term breakout, the pullback, and the continuation pattern on the MRCB. That we are seeing price has experienced the short-term breakout above the 74 cents level, accompanied by some of the mild improvement in volumes on MRCB. So for MRCB right now, we could expect further recovery on MRCB towards the 81 cents or even towards the 88 cents level. Your stop loss point will be located below the recent low, which is currently located at the 67.5 cents on MRCB. Everything appears to be quite positive for the MRCB right now, as you can see that the MACD indicator has been forming the higher low formation over the past couple of months. Another construction company that we can watch out for would be Sunway Construction. Sunway Construction has earlier traded lower towards the recent low of the 1 ringgit and 30 cents level after the cancellation or the termination of the underground project of the Klang Valley MRT2 before it was being re-awarded back to MMNC and Gamuda joint venture again at a lower cost. So Sunway Construction has then recovered from the 1 ringgit and 30 cents level. Subsequently, price traded a sideways manner over the past 2 to 3 weeks trading period before we are seeing a good short-term consolidation breakout above the 1 ringgit and 50 cents level on last Friday. With the breakout above the 1 ringgit and 56 cents, we could accept further technical recovery on Sunway Construction towards the 172 or even towards the 183. Your stop loss point will be located below the 141 on Sunway Construction. Last two company for today will be firstly is Bowers. Bowers has seen some of the recovery trend being formed recently after price has then hit the double top formation around the 1 ringgit and 42 cents. Price subsequently staged a pullback towards the 92 cents level. The 92 cents level also coincides with the previous near the previous support level, which is near the EMA 120. As earlier retraced towards the 92 cents and subsequently recovered back towards the 142. Once again, it has retraced back towards the 92 cents level and formed some of the sideways formation. So for Bowers right now, what we need to do is we are going to monitor for this trend line breakout, which is above last Friday's high of the 1 ringgit and 6 cents. Should price breach above the 1 ringgit and 6 cents, given that price has really formed a bullish candle on last Friday, accompanied by some of the improvement in volumes, we could expect further technical recovery on the Bowers towards the 118 or even towards the 1 ringgit and 23 cents. Your stop loss is located below the 97.5 cents level. Should there be a breakout above the 1 ringgit and 6 cents on Bowers, things appears to be quite positive on Bowers right now, as you can see that our price has been forming some of the accumulation or some of the improvement in volumes being traded recently. Well, during this period of time, we are seeing the MACD indicator has been forming the higher high and also the higher low formation, with the RSI flirting roughly around the 50 level over the past 2 to 3 weeks trading period. Last company for today will be CCK. CCK has been on a pullback phase after a sharp rally towards the 1 ringgit and 1 cents level. Since then, we are seeing a healthy pullback after the price has staged a one-way trend towards the 1 ringgit from the around the 40 over cents. Since then, price has staged a healthy pullback towards the 70.5 cents level before staging a sideways pattern over the past 2 to 3 week trading period. After forming the double bottom formation around the 70.5 cents level, we are seeing CCK has formed the double shape formation breakout on last Friday. This is the double shape formation breakout as price formed the bullish candle and subsequently breached above the 80 cents level. So with the breakout above the 80 cents, we could expect further recovery on CCK towards the 88.5 cents or even towards the 93 cents level. Your stop loss point will be located below the recent low of the 75 cents, and if you can take further risks, the final defense will be located towards the 70.5 cents level on CCK. If you have any questions, you can put in the chat box and reply you shortly. If there's no question for today, then we'll end the morning briefing. Thank you.